The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon and a warm welcome to all. I am Ridil Mishra and on behalf of Care Ratings, welcome you to a live webinar on paper and paper products, industry overview and outlook. We appreciate your time in joining us for this webinar. To take you further on this, may I introduce our speakers for today. We have with us Mrs. Revati Kasture, Senior Director at Care Ratings Limited. Mrs. Kasture is associated with us for over 15 years. Prior to joining Care Ratings, she was working for a European bank. She is part of the rating committee of Care Ratings. Along with Ms. Revati, we have Mr. Saurabh Bhalerao. Saurabh is working with Care Ratings as an associate director and has an industry experience of over a decade. He is part of the industry research team. I would like to inform the participant that the discussion is in form of a presentation which is visible on your screen. In case of queries, please key in your questions in the slot provided. We'll be having a Q&A session at the end of the presentation. I repeat, in case of any queries, please type in the questions in the slot provided. We'll be having a Q&A session at the end of the presentation. May I request Ms. Revati to begin the session?
Thank you, Mridul. Good afternoon to all of you, and thank you for logging in for the webinar. CARE's rating universe in paper and paper products sector comprises more than 100 companies. In the webinar today, we aim to provide you with an overview of the industry along with its growth, trade movements, characteristics such as segmentation, price demand drivers, and challenges, and input indicators such as raw material and power and fuel costs. Apart from that, we'll also be mentioning the outlook of the entire sector and the segmental outlook too. The rating dispersion and the financial performance of the sector would also be discussed. I would now request Saurabh to take the presentation ahead.
Thanks, Revati. Moving on. Globally, over 400 million tons of paper and paper products were consumed last year. The world's three largest paper producing countries are obviously China, the US, and Japan, while India accounts for a small but growing share of the global market. The global paper and pulp mills has contracted slightly over the past 5 years, primarily due to the shift to digital media and paperless communications across the emerging economies. However, demand in the emerging markets has partially offset the decline by driving increased demand for paper, especially in the packaging materials. The Indian paper and paperboard industry is one of the oldest manufacturing industries in India. The first paper mill was started in 1812 in Serampore, West Bengal. The industry accounts for approximately 3 to 4% of the world's production of paper. The industry estimates that the contribution of to the exchequer is around 4,500 crores, while providing an employment for over 5 million people across approximately 750 paper mills. India is a large underpenetrated country for the paper industry, as despite the sustained growth witnessed by the industry, the per capita paper consumption in India stands at a little over 13 kilos, way behind the global average of 57 kilos and over 200 kilos in North America. The paper industry is classified under four segments: printing and writing, paper, packaging paper and board, specialty paper, and newsprint. Printing and writing segments share is at 31%, while packaging paper and paperboard stands at a higher of 49%. Paper mills are concentrated in the states of Andhra Pradesh, Tamil Nadu, Maharashtra, Punjab, Madhya Pradesh, and Gujarat. These mills use a variety of raw materials such as wood pulp, bamboo, recycled fiber, bagasse, wheat straw, rice husk, etc. The geographic location of the mill often determines the type of raw material used. Most mills in the northern and western regions of India depend heavily on agricultural residue and waste paper as the raw material. Pulp and paper production in southern and eastern regions use wood and bamboo as raw materials. The proximity and assured availability of forest resources in the vicinity of the plant and other factors such as availability of water, forest policies also influence the location of the manufacturing facilities. Most of these paper mills have been in existence for a long time, and hence present technologies fall in a wide spectrum ranging from the oldest to the most modern. Approximately 24% of these mills are based on wood, while 60 to 65% on recycled fiber and the balance on agro residues. Moving on, the paper and paper products consumption in India grew from 9.3 million tons in FY08 to 15.3 million tons in FY16 at a compounded annual growth rate of 6.4%, making India the fastest growing market for paper globally. The key drivers have included rising urbanization, increasing penetration of organized retail, higher growth in the FMCG, pharmaceutical and processed food industries, thereby increasing package demand, and a focus on education driving by the government. Further, moving on, the India imports label stock, wet strength papers, tissues, pulps, craft, digital papers, coated papers, and some other specialties, and primarily exports raw duplex, mostly based on recycled fiber, and converted products to its neighbors and the Middle East. Paper and newsprint imports were up 45% in FY17 over FY16. Further, due to the FTAs and other similar factors, imports from ASEAN nations were surged by 67% in FY17 over 16. Imports from China have also increased by 44%. Imports reached 1.1 million tons in the first half of FY18 as against 650,000 tons in the first half of FY17, indicating an increase of approximately 69%. This increase in imports has been led by the duty-free import from ASEAN countries coupled with unavailability of raw materials domestically. Further, the domestic newspaper industry is considerably less competitive against imported ones, given the nil customs duty imposition on imports of newsprint, as per the terms of the free trade agreement with ASEAN and South Korea. As mentioned earlier, the industry is divided into four segments: printing and writing, packaging, specialty paper, and others. The major subcomponents of these industry segments have been detailed below. The printing and writing segment has remained stable at around 30%, while packaging paper and paperboard share has increased from 46% in FY08 to 49% in FY16. Packaging paper and paperboard segment accounts for nearly 49% and is the largest segment. It grew at a CAGR of 7.2% from 4.3 million tons during FY13 to 7.5 million tons in FY16. Rising urbanization, increasing penetration of organized retail, higher growth in FMCG, pharmaceutical, and processed food industries are the growth drivers for the segment. The printing and writing paper segment forms 31% of the domestic market, and its demand stood at 4.7 million tons in FY16. This segment can be further classified into four parts, namely uncoated wood-free, coated wood-free, uncoated mechanical, and coated mechanical papers. Domestic production is sufficient to satisfy the demand for uncoated wood-free and coated wood-free papers. However, the demand for uncoated mechanical and coated mechanical is met through imports due to the lack of availability of softwood or mechanical pulp in India. The demand drivers for this segment include the rising literacy rate and the universalization of education through legislative steps like right to education, government other measures like Sarv Shiksha Abhiyan, and increased spending on education. The newspaper segment comprises of approximately 16% of the paper industry and grew at a CAGR of 3.5% during FY08 to 2.5 million tons in FY16, on the back of increasing circulation of vernacular dailies and magazines. The prospect of the newsprint segment primarily depends on its consumption by the print media industry. Further, imports account for a substantial portion of the consumption. With import price realizations remaining steady, the share of imported newsprint in the total domestic newsprint consumption has increased sharply from 50% during FY13 to 60% during FY16. Specialty papers is the smallest segment, accounting for only 4% of the industry size. It is used primarily for packaging of gift items, grocery bags, and tissue papers. This segment, especially the tissue papers, is the fastest growing segment, albeit on a much smaller base. Its demand is derived out of a general improvement in the standard of living, which allows for the substitution of paper for general packing purpose. As can be mentioned in the chart, the global demand for paperboard has also increased marginally, while the printing and writing segments have actually witnessed degrowth on account of increasing preference towards the paperless economy and rise of digital media. Global printing and writing segment is substantially smaller as compared to the in percentage share as compared to the domestic market segment, while specialty segment is proportionally larger compared to its domestic counterpart, largely as due to the tissue and similar paper being consumed globally on a much larger scale as compared to India. The domestic prices of various papers have remained unchanged on a global basis. This trend has continued for the past couple of years. The paper companies did not undertake price hikes due to factors such as competition from imports, stabilization in wood prices, and lower power and fuel costs. Nonetheless, paper prices are projected to rise marginally in FY18. Even though stiff competition from imports is likely to persist, an anticipated rise in wood prices, along with slightly higher fuel cost, would compel paper manufacturers to undertake these price hikes. The primary demand drivers for the industry include rising income level and growing per capita expenditure. In the last decade, Indian economy has progressed rapidly. Correspondingly, India's per capita GDP has increased from 71,000 rupees in FY12 to over a lakh in FY17 at a CAGR of 10%, fueling a consumption in the country. Correspondingly, the per capita and personal disposable income surged from 73,000 rupees in FY12 to close to 120,000 rupees in FY17. The growing Indian population has also led to an increase in the earning population, that is, age group 15 to 60 years of the country. The proportion of Indian populace in this segment increased from 55% to 62% in 16. Correspondingly, the large size of population, the lower median age implies a higher working populace, thereby clearly outlining the immense earning potential as well as the spending potential of the populace. The median age of India is 26 years, on one of the lowest globally in comparison to 37 years in the US, close to 46 in Japan and 36 in China. Majority of India still lives in villages. This statement no doubt holds true, but the figures suggest that there has been a paradigm shift in the populace in terms of urban and rural divide, clearly indicating the rise of urbanization, primarily due to aspirations of higher income, a higher standard of living, has drawn villagers to settle in towns and cities. This transition from rural to urban areas has also led to an increase in demand for goods and has shifted the consumption pattern. Further, the widening spread of education and rise in the literacy rate, as indicated by the increasing number of colleges and institutions, rising enrollment numbers, rising literacy, is expected to lead to increased expenditure on textbooks, notebooks, and other assorted paper products, thereby driving demand. Further, due to higher literacy levels, circulation of other print media, such as newspapers, is also positively impacted. As can be witnessed by the Audit Bureau of circulation of print media reached 62 million copies a day in 16, implying a decadal compounded annual growth rate of nearly 5%. Indian language newspapers primarily contributed to this growth, with Hindi, Telugu, and Kannada growing at a CAGR of 8.7%, 8.2%, and 6.4% respectively. On the other hand, English publications grew at a CAGR of 2.3% in the same period. Further, as per the ABC, the circulation of Indian dailies grew at 12% between 2013 and 2015, while dailies in countries such as Australia, France, Germany, and Japan witnessed a 3 to 6% decline. Moving on the raw materials front, pulp is the primary raw material used for the manufacturing of paper and is obtained through processing of fibers separated from wood, waste paper, agricultural residues, etc. The Indian paper mills are categorized based on raw materials used by them in the manufacture of paper. Due to the limited availability of domestic wood, agro-based raw materials and waste paper are generally used to manufacture paper. About 78% of total land area is non-forest, With diminishing forest resources and limitations on enlarging man-made forests, there is scarcity of pulp for paper mills. The wood companies have increasingly resorted to the import of wood chips and have invested in the social forestry initiatives for supply of wood. The waste paper is also imported as well as domestically procured. The prices of wood has increased substantially in the period FY12 to 15-16 by around 17% CAGR. The rise in input costs, coupled with the foreign exchange fluctuations, have led to a stress on profit margins for most players during this period. However, the wood prices have fallen in FY16 and 17 by around 9 to 10% from the peak levels of FY15, leading to an improvement in profitability. The raw material costs as a percentage of sales have increased since FY11 and peaked in 15 due to international prices and as initiatives such as agroforestry boosted local supply. Kraft paper is a globally traded commodity and prices are highly cyclical and volatile. Pricing is primarily influenced by the balance between supply and demand as affected by global macro conditions, changes in consumption and capacity, the level of customer and producer inventories, and fluctuation in exchange rates. Average European prices for NBSK pulp since FY 2008 have fluctuated between low of approximately $575 in 2009 and a high of $1,030 in late 2017. Recently, paper companies have witnessed an increase in raw material costs as international pulp prices have increased to close to $780 a ton from the earlier $650 per ton. Further, chemical prices and coal prices have also increased. Consequently, companies are expected to increase prices to maintain margins. As can be noticed, the majority raw material, the wood, recycled paper, and aggregate residues have issues relating to shortage of wood or shortage of bamboo. Volatile prices continue to affect the pricing of wood, while recycled paper is primarily affected by the low domestic recovery rate, quality of the domestic recovery papers, and imported volatile prices. While agri-residues such as bagasse and cereal straw are affected by the limited availability due to use by the electricity cogeneration plants, seasonality, and environment investments needed. Moving on, as we can see in the slide, packaging paper and paper boards have the manufacturing units largely based on waste paper, consume lower amounts of energy as compared to other segments. In light of restrained supply of coal domestically, the players depend on imported coal. The general decline in imported coal prices, coupled with energy-saving efforts of the paper manufacturers, have reduced the power and fuel cost of the industry as a percentage of net sales from a high of 17% in FY12 to 12% in FY18. The decline in the imported coal prices was partially offset by the weakening rupee. In India, adequate supply of water is another important factor for determining the location and pulp of pulp plants, as the industry is one of the largest consumers of water. Large integrated mills generally source their water from the surface water, such as rivers, while large numbers of small and medium-sized paper mills are dependent on groundwater. According to CPPRI estimates, average freshwater consumption for a domestic forest paper mill is estimated to be in the range of 120 to 200 cubic meters per ton, compared to an international standard of 20 to 60 cubic meters per ton. This is largely on account of the use of old technology and poor waste management practices. The other challenges include access to quality and cost competitive raw material. As mentioned earlier, India is a wood fiber deficient country, and as industrial plantations are not permitted in the country, and inadequate raw material price availability domestically is a major constraint. Further, the recovery rate of waste paper in India is quite low, at around 30%, due to lack of an effective collection mechanism. With issues like availability of quality raw material at competitive prices, the players depend on imports to meet their raw material needs and often pay a premium for availing them, thereby impacting profitability To alleviate this significant challenge, the Government of India could frame a policy to allow access to degraded forest land for paper mills to raise pulpwood plantations for increasing availability and reducing import dependence. Further, the collection mechanism would need to be strengthened to increase usage of waste paper. Major competition that the domestic industry faces is from imports. Imports account for over 20% of the paper consumption in India. Domestic paper manufacturers are less competitive against imports given the quality and the pricing of imported papers. As per IPMA, the paper from ASEAN countries is available at a significantly cheaper rate as compared to India. Rising imports from surplus countries like China has been a major concern for local players in India. Further, on account of cheaper imports, domestic industry has faced challenges in pricing its products. An anti-dumping probe initiated into cheap imports of uncoated paper from Indonesia, Thailand, and Singapore has been initiated by the government following complaints from some domestic companies. Another major challenge that domestic paper industry manufacturers face is technology. As the Indian paper industry is largely fragmented with lower capacity for an individual paper mill, it is also prone to using outdated technology. Resultantly, it is estimated that both raw material as well as power consumption is higher as compared to a modern paper mill. Adoption of new technology by domestic paper manufacturers would lead to emergence of more competitiveness in critical areas, including quantifiable rises in productivity, improvement in quality with a reduced cost, improvement in energy efficiency, and better compliance with environmental norms and safeguards for sustainability of the products. An emerging challenge domestically is the shift to digital. A recent preference for consumers has been the movement to digital consumption, such as online newspapers and publications, coupled due to rising internet penetration. This has not yet materially affected the domestic industry, as it has affected the global industry. However, proliferation of digital devices has contained a demand for newsprint and stationery to a certain extent, as can be witnessed by the outlooks. This structural impact could rise given that the youth are the driving force behind the digital consumption. On the supply front, the current installed capacity of the industry is around 13 million tons per annum, and the industry is operating at a utilization level of around 85 to 90% on an overall basis. After witnessing a growing capacity addition in the early part of the decade, the planned domestic capacity additions for paper and newsprint has slowed down primarily due to shortage of raw material, that is pulp, and rising prices of local waste paper. This has been mitigated by the agroforestry initiatives. However, the industry has been requesting for a policy to allow access to degraded forest land to raise plantations to enable sustainable source of raw materials. Mostly, capex in the nature of modernization and debottlenecking are being undertaken recently. Further, capacity expansions are expected to be primarily in the packaging and paperboard segment, with paper companies such as Genus Papers and Paperboards announcing MOUs in Uttar Pradesh for capacity expansion as well as new plant setups in Maharashtra rather than in the printing and writing segment. The sector witnessed supply disruptions during FY17, primarily on account of shutdown of capacity by a major player, thereby leading to higher realizations for most players in FY17. However, pricing power of players is expected to remain muted on account of recent capacity additions, as well as threat from cheap imports under the FTAs. Government policy of extending preferential tariff to import of paper and paperboard under the FTAs and other bilateral and multilateral trade agreements has led to an increased duty-free imports of paper, especially from Malaysia, Indonesia, and Thailand, thereby impacting domestic players. Government has supported the industry through FDI and other education initiatives like Sarva Shiksha Abhiyan, National Education Mission, and plans to open new schools. These initiatives are expected to boost the consumption of the printing and writing segment. Further, disincentives on certain forms of plastic packaging is also expected to further benefit the paperboard segment. Along with this, as mentioned earlier, domestic industry is pushing for forest policies to boost available pulp on degraded policy and has been asking for anti-dumping duties to safeguard domestic prices, and has also been pushing for duty-free imports of new and second-hand machinery and equipment for technology upgradation. As can be witnessed, revenues grew by 3.4% in FY16 and 9% in FY17 after registering a marginal drop in FY15. While the operating and net profit margins expanded by approximately 350 basis points in FY17 on a year-on-year basis, the margin expansion was the highest when compared to the previous 6 years. The expansion in profit margins was mainly on account of control of input costs as raw materials dropped to 45% as a percent of sales in FY17 from 48% in FY15, and the lowered power and fuel costs. Further, FY16 PAT margin was materially affected by losses suffered by players such as Rainbow Papers, FY16 loss of over 500 crores. The company is currently under liquidation. Further, FY17 PAT margin was affected by the over 900 crore loss reported by Build Graphics. The margins would increase substantially if Build is excluded from the sample. FY18 numbers are also expected to be robust with improved efficiency, pricing environment, and reduction in the overall interest expense. The paper companies had borrowed in the prior years for capacity expansion, and consequently the debt levels had increased for the industry. As depicted above, the net debt by EBITDA, which had fallen in FY11, has increased in 2.6% and peaked at 2.6 times in FY11, started increasing and peaked at 4.2 times in FY16 due to a subdued operating performance. Correspondingly, profitability declined and interest coverage also declined. A high net debt to EBITDA level also indicates elevated leverage and lower ability to pay down debt, thereby potentially limiting the ability to borrow and fund further capex. However, the industry's profitability improved in FY17, and correspondingly the matrices also improved. The key factors impacting credit profiles. The key credit evaluation depends on involvement of assessment of the scale of operations, access to raw materials, geographic location, operating efficiencies, owing to a highly competitive product segment, and diversification in terms of product sales and distribution network. The financial risk profile is also affected by future plans, and given the extent of leverage prevalent in the sector, the ability to fund the capex plans is also measured. Furthermore, given the sectoral cyclicality arising due to the clustering of capacity additions or the demand slowdown in product segments are also other governing factors driving the credit. CARE has rated close to over 75 companies in the industry. Import dependency, volatile raw material prices, subscale operations, and intense competition have constrained the ratings of several companies. Further, with a few players in the investment grade category and a long tail in the below investment grade category also substantiates the industry structure of a few large players and a small number of small companies. Overall, domestic demand is projected to grow at 6 to 7% per annum, with the paperboard segment estimated to grow at a higher rate of 8 to 9%, while the writing and printing paper segment is estimated to grow at around 4% Tight markets, low Chinese pulp inventories, healthy demand favor a pricing outlook that will again have an upside in 18. And further, a bullish outlook due to a lack of supply coming to the market. The waste paper prices, however, may fluctuate on account of volatility in the international prices, healthy demand, and forex fluctuations. The profitability of the players is expected to be maintained in the medium term at the back of eased out cost side pressures and improved realizations of the finished goods. Further, with capex plans only in this one segment and minimal capex in the printing and writing segment, the capital structure and cash flow positions for these players is expected to be comfortable over the next 1 year. Therefore, the outlook is expected to remain stable with a positive bias in the medium term. Thank you.
Thank you, Saurabh. Dear participants, we will now taking a break of 2 minutes before we come back to take the Q&A session. You are please requested to start keying in your questions in the slot provided. I repeat, we'll be having a break of 2 minutes before we begin our Q&A session. Thank you. Hi friends, we are beginning our Q&A session now.
Hi. The question is, can you give a list of companies covered? Well, as mentioned, CARE rates over around 100 companies, and we've covered around 50 major 50 companies in the financial analysis slide. But do drop us an email. We can probably cover a list of companies. The financial data has obviously, as mentioned in the slides, we sourced from ACE Equity and internal analysis. The next question is impact of closure of Chinese capacity. Yes, China has impacted the market on two fronts, with a banning of low quality waste paper as well as closures of older capacities. In The impact of waste paper has been that the prices have tumbled globally earlier and have now fairly stabilized. This can also be further the closure of capacities due to lower environmental standards has supported prices globally. The raw pulp capacities prices have been on an uptrend also due to because of these closures and no new capacities coming online in the medium term. The major players in the paperboard segment include Astron Packaging, which is just listed. Who are the major players in the paperboard duplex segment? The major players, one of the players which has listed recently is Astron Packaging. Plus, quite a few of the other players, such as West Coast and the others, are also present in this segment. How do you see the trend of imported softwood pulp prices in the coming time? As mentioned earlier, also during the presentation, the softwood pulp paper prices had peaked earlier and then softened in FY 16-17. They are moving again ahead. They're moving on the uptrend in the medium term. That is FY 17, 18 and 19 see an uptick in the pulp prices globally. Question is, do you have any idea on Built restarting their plant? Uh, Considering the IDBI and the NCLT insolvency and courts backlog, it would not be right to hazard a guess when it would be restarting right now. Paper and other papers. As the primary uses of specialty paper is the tissues available in various sizes, also packaging of smaller gift items, grocery bags and others. And Chinese capacity closed, can the newsprint industry witness improved margins? Uh, as mentioned, the primary Chinese capacity closures were in the printing and writing segment rather than in the newsprint segment. So newsprint segment prices have as is on the uptrend anyways, and domestically newsprint prices are influenced by international factors. Don't foresee much of an effect on Chinese closures on the newsprint segment. The question is, we have seen in the past that some paper mills, especially in the south, shut their operations due to lack of water. Will water availability be a major issue for Indian paper industries? Yes, water availability continues to be a major issue for the industry. And one of the consequences, they are investing in water recovery, refining mechanisms also. These domestic players going forward. Yes, we do foresee in the medium term to cover to cost as cost rises, uh, players to undertake price increases, especially in this quarter. Coming online, uh, as mentioned earlier, and as well to take it again, there are no major capacities coming up, especially in the printing and writing segment. Uh, there is some capacity addition announcements in the packaging paper and paperboard segment. These are on the drawing table right now, and they would take some time to come online. We have seen only smaller capex plans, especially to debottlenecking and consequently slight margin increases in capacities. Hi, we have another query. Hi, as per your comments, the increasing capacity additions by major players and no near future increase in import duty cut on imported paper, then still do you see any increase in the paper price? As mentioned, there is only minimal capacity additions in the industry, and domestic pricing is continues to be influenced by international prices. Yes, Indian players are expected to undertake marginal price rises to cover the rising input costs, especially on the pulp front.
Yeah, the question is, will the newsprint industry get affected by the expected increase in domestic prices of paper? As you know, you've heard concerns by the newsprint industry companies saying that paper prices are going to go up. I think that's precisely what's covered by Saurabh in the presentation earlier also. We are expecting prices to move up marginally because of rising input costs. But of course, there is a fair bit of competition even from imports, so we don't see them going very high up. But yes, there is going to be a marginal increase in prices going in the year in the next quarter. Thank you.
Uh, Thank you, friends. Now, I think with this will end the Q&A session. In case of any queries, further suggestions, and all, you can always write to us. The comment box will be sent individually to all your email IDs. And thanks again for taking your time out and being part of this Care Ratings webinar. We also hope the discussion was insightful, and we really look forward to your participation in future also. Thank you so much.